Thank you guys for clicking on today's video. We will be going over the book value of stocks and how you can use this to trade and make a decision on your stocks. So basically what the book value is of a stock is what a current stock's liquidity would look like and how much they would be able to pay out each share if they decided to liquidate everything right now. So now here's how we can use this to decide if we want to invest. And now personally, before we continue, I don't use this to determine whether or not I want to buy a stock. I mostly use it to determine whether or not I want to keep holding on to a stock. And it mostly just helps me sleep at night knowing that this is what they could pay out. So the example we're going to look at today is actually Citibank. So the main place I go to go find the book value on a stock is actually Zacks. As you can see right here, they're currently trading at around $50 today, and their book value is actually over $80, which is pretty nice. Now you might be thinking, oh, if they're trading below their book value, shouldn't you buy them? Well, that's what some people would say and consider, but I go into a little bit more research and I go to this website over here and I look at their historical market price to book value ratio, and I try to see whenever this ratio was at its lowest and at its highest and what trends occurred after that. As you can see, the lowest they've ever been was 0.1 and the highest they've ever been was about 0.8, and right now they're at about 0.5 with their whole average being around 0.6. Using this information, you can decide whether or not you'd like to buy the stock. Now again, I use it as more of a way to remind me why I should keep a stock, not whether or not I should buy a stock. As you could also see during the pattern that just because it's below its book value doesn't mean it'll go all the way back to and above it, as it hasn't done that for many years. So I hope this just added another tool to your little toolbox of investing. Remember to leave a like, comment, and subscribe for more future content.